Are you a new trader and wanting to know what indicators are? Because that was once me. I hear all this noise about the best indicators and what indicators to use to put on your charts, but I had no idea what they even were. So after my many years of trading, I'm about to give you the very best indicators to put on your charts to make you a six-figure trader. Let's hop straight into it. First, I want you to remember, indicators are tools that us traders put on the market to better visualize and see what's going on in the overall market. They are not the market itself. All right, future master traders, I know y'all been waiting on it, so let's hop into these indicators. The first one we're gonna talk about, that's the zigzag. And the zigzag is a beautiful beginner-friendly indicator because it cuts out all of the consolidation in the market and lets us know where price has been so that we can know what type of market structure we're dealing with. The second indicator, that's the 200 EMA. And the 200 EMA is great because it allows us to see, are we in a bullish trend or are we in a bearish trend? Is the market pushing upwards or is the market pushing downwards? And the last and final indicator we're going to talk about, that's the stochastic oscillator. And why the stochastic oscillator is great, it tells us when market is either looking to continue into that uptrend or reverse into that downtrend, either oversold or overbought. So let's hop onto the charts. I'm going to show y'all exactly where to find them and how to add them to y'all charts. Let's get into it. Now we on the charts, we on a pocket option charts, and this is what the base of it looks like. We looking at no indicators, we looking at just the base charts. The first thing you want to do is come over here. You see you got your pairs up here, you got your cryptocurrencies, you got your indices, your stocks, what to look for there. One more over, you got your time frame, and the third one over, you see what it says, hovering over it. That's our indicators. Now, the three indicators we said we were going to talk about, number one, the zigzag, and the second row, all the way at the bottom, are moving average. The third row, 1, 2, 3, 4, 5, 6, 7 from the top, and our stochastic oscillator. Third row, second from the bottom. The very first one we're going to talk about, boom, our zigzag. And what you do is you click on it, just like that. And now you'll have your indicator popped right up on the market. As you can see, like I said before, the zigzag shows where price action has been to let us know market structure that we're in. Now I'll give you a quick example. Our zigzag could have connected to any one of these dots up here, but it let us know from here all the way to here was the main two moves. This reversal here and this reversal here. Now we came back down, and at this previous zone right here where we had small bits of consolidation, we got another reversal now into the uptrend. Same thing happened, price went upwards, and where we got a previous reversal, now turning into a double top. One of the things that you're going to want to go over and educate yourself on using the zigzag is a few market patterns, a few chart patterns. For example, I'll give you about 3 of them. We got an example of one here, double top. You see there's another example here, double top. I'll give you another example. Let's come find another one in the market. Double top, give you another one. Double top. So the second one, we got a double bottom. You see double bottom forming. What do we got down here? Double bottom forming. And what happened after the double bottom? We got a bullish uptrend. And the last one that I'll show you that's a little bit more complex, it's going to be a head and shoulders like this. You see the two shoulder points here with the head up there, with the double top head up there. So what does that tell us? It tells us a few different things within the market. It's either an indicator that price is going to break that previous resistance zone or support zone, or price is going to hold there. For example, the zigzag is letting us know at this double top, this is a major resistance zone for the bulls. For the bullish trend trying to go upwards, what you can almost guarantee when you get to this point, what the market is telling you, you're going to get some type of movement, whether that be reversal, small consolidation like we got here after it set this reversal zone, or it's going to break the structure and continue to go upwards. And we'll watch that play out here as we get into our next few indicators. The second indicator we're going to talk about, our moving average. What was it? 7 down from the top on the third row. We click our moving average. I already have one there. This is why you favorite them. So they'll stay right here in this area when you favorite them. And all you got to do is click on the eye to have them show up or go away. Like I said before, what we do is we come here and we change the moving average to an EMA. And all that is an exponential moving average. Basically saying all price wants to do is it calculates the last 200 periods, 200 candles of where the market has been, and lets us know the overall weight of the candles, the overall weight of the trend. Is price on top of the trend, or is price below the 200 EMA, meaning it's in a bearish trend? As you can see, the 200 EMA also works as support and resistance. The EMA is letting us know that we're in an overall uptrend, and as well as I said, it shows us some support and some resistance. For example, price broke through the EMA here after a short bit of consolidation. Price broke through the EMA into a clear channel, and what did it do? It continued to sit on top of the EMA, letting us know more buys than sells, more bulls than bears in this overall trend. But as soon as it came to that 200 EMA, what did it do? The bulls used the EMA as support to continue their overall trend of what's going on in the market. We got another example here. We got price going up, small pullback, up, small pullback, up, small pullback, up, small pullback, came down a small bit past to the 200 EMA, but at the end of the day, the EMA was like, nah, we in an uptrend. So what the bulls did is they gathered that momentum and they used that momentum to further reversal and continue to push into their overall uptrend. You see from here, we had a small double top, but the next zone was all the way up here. So the bulls used the 200 EMA as support and resistance. And what are we looking at within the market to tell us what to do from this information? This information is telling us it's in a bullish trend. Depending on what type of trader you are, you're going to want to be looking to buy in this market. Why? There's more green candles in the most simplest form. There's more green candles than there are red candles. Does that make sense, squad? And as you can see, like we talked about it with the zigzag here again, setting this major zone up here. We said we would watch it play out. Price came back up there. And what did it do? It reversed back down up here at this major zone, continuing the double top. Now you got to be careful because it's a small bit of consolidation. And this is where you learn your chart patterns and your market patterns, so you can recognize that this small pullback could potentially be a bullish engulf. Almost like a liquidity sweep, a fake out at this previous downtrend, at this previous resistance zone, acting like it was going to downtrend like it did before, but it's just grab liquidity to be able to catch momentum to continue its overall uptrend. Now the third indicator and our final indicator we're going to talk about, that's the stochastic oscillator down here. I'm sure y'all noticed down here. And y'all been seeing the stochastic oscillator. What the stochastic oscillator mainly does is it measures momentum. Where is price at? Is price overbought? Is price oversold? So the 80 up here to the right, you got a 20 down here. The 80% lets you know price is overbought. The 20% lets you know price is oversold. And price wants to be somewhere in here in this middle area. Once it gets too high, it wants to come back down. Once it gets too low, it wants to come back upwards. The blue trend, the blue line is always leading the way, and the orange line is showing the momentum catching up to the price. So let's give some examples. And mind you, it's a reflection of the candles. So as you can see here, we had price at 208, 209 from right here at this very low point at 1946. You can see the time right here. We had price reverse up into this bullish trend, and it's telling us right here, price continued, small consolidation. So as you see right here, this small consolidation is this right here, and then made its way back up into this uptrend. Now, what else does the stochastic tell us? The stochastic tells us when price is either gonna reverse or continue to go in the direction of the trend. How can we tell that? What did I say before? The stochastic wants to be in the middle. So every time price got up here to this 80 range, what did it do? It came back down. It came to this 20 range. What did it do? It reversed and went upwards. Back to the 80, downwards. Reversed in the middle where it wants to be. Back up to the 80, back downwards. Came down to close to the 20. Now it went upwards. You seeing the trend? So it's also a way that you can tell where price is not only moving, but where price is going to reverse. And how will we use, and the final thing we'll talk about is how we can use these three together. As you see here, what's going on now? Price is breaking. Oh yeah, one last thing I'll tell you about the stochastic. Every once in a while, for example, this right here, this bullish trend, when price breaks through that 80 and starts sitting up there, that's an indicator price is going to continue in that direction and doesn't have a plan of moving back down for some time. For example, from 22.13 all the way to 22.25 for about 10 minutes, price held above that 80 stochastic, which was this move up right here, just sitting up there. You understand what I'm saying? So when price sits, breaks through the structure of either the 80 or the 20 and hovers up there, that's an indicator price is going to continue to go in that direction. So now let's look at what we got on the market and let's do a small example of what we would do. We got what our zigzag had two resistance zones here. It started to form a third, but due to our market structure, we ended up getting a double bottom. These two bottoms down here. Use that as momentum to break past this structure here. What is price doing? Previously, it let us know it broke above the 80. Now it's breaking above the 80 again and looks like it's looking to hover. As you can see, price has a small doji candle now. And what did the doji candle do last time? It caught momentum liquidity swept the sellers who are thinking they can catch a quick sell. And what is the EMA telling us? The 200 EMA is telling us in an overall bullish trend upwards. So what will we plan for now? This is going to end up being support potentially for the buyers to continue to move it upward in the overall bullish trend. As you can see, price is breaking through, holding up here at the stochastic, broke through the zigzag here, now creating a new market structure, a new zone, and it's rising on top of the 200 EMA telling us don't sell in this market, continue to buy. The buyers are winning. So those are the three indicators we went over today. They were the zigzag, the stochastic oscillator, and the moving average. And we saw them play out right in front of our face, and seeing what happens when we use all three of them together within the markets so that we can get a better view of what's going to happen. It takes time. I put in a lot of hours. I put in a lot of work looking at market structure, chart patterns, using all the different indicators to see which ones work for me. And now, from the game I've given you, you need to do that for yourself. Maybe the 200 EMA doesn't work for you, but the stochastic does, and the zigzag does. So use those. Don't be afraid to switch it up, like Kobe did with Michael Jordan. He replicated the game and he made it his own, because that's what it takes. It's going to take now your research and your trial and error to become the person that you want to become. Don't be afraid to take those risks. The only risk is not knowing what you're doing. When you know what you're doing, all it is systems. Just like anything, in any sport, and anything in life, you win some, you lose some. But for us as traders, we live to trade another day. So I hope y'all enjoyed this. Let me know if you used out any of these indicators and how they work for you. But until next time, y'all already know what it is. Stack it up. Stay blessed. Peace.